So I think how I ended up in the NCFF, I think, as you said, it built on a number of factors. My favorite hobby as a child was staring down a microscope. So I've always loved nature and been fascinated and curious. So that curiosity, I think, has really lent me to get around in terms of things. So I started off, say, studying environmental science and civil engineering. Then I moved into the water sector.
Welcome to Investing in Regeneration. This podcast is about changing how we understand, plan, and finance projects so that finance becomes a driver for better decisions, not just the last step in the process. In each episode, we unpack a real deal or initiative through three lenses: understanding, planning, and financing. We explore how it came about, who worked together, and what needs to change for these innovations to become mainstream. Because the real bottleneck is not capital. It is how investments are originated, structured, and brought to bankability. Our financial systems can do more than financing change. They can help shape it. Welcome, Stephen. I'm very happy to have you with us today. For those who do not know, Stephen Hart is Principal Advisor for Nature and Water at the European Investment Bank, working on nature and climate adaptation, financial advisory, including the design of financial instruments. He has a background in project development and finance in water, environment, and utilities in Europe, Africa, and Asia of over 30 years. This has included the appraisal of major infrastructure and developing national and cross-border programs such as the Lake Victoria Water and Sanitation Program. After serving at the EIB Group Office in Copenhagen with an Arctic remit, he was the focal point of the Natural Capital Financing Facility between 2019 and 2023 within the EIB's Equity and Growth Capital Department. These included the development of nature-positive businesses. He currently designs and delivers a range of advisory activities within the nature and climate space. Present key topics that are keeping you busy, I understand, are developing funding strategies for the EU Nature Restoration Regulation approved in February, the EU Nature Credit Roadmap, and the most recently approved Water Resilience Strategy, as well as rolling out a Climate Adaptation Advisory Program. Stephen holds degrees in engineering, environmental science, banking and finance, and communications. He holds both positions in civil society, including social entrepreneurship and marine restoration. And I think we will come back to that later. Today, we will talk about the evolutions and lessons learned in nature and adaptation finance in Europe, where Stephen, as you have already heard, has played an important role within the EIB. From the first natural capital financing facility, which we will call now NCFF, set up from the beginning as a pilot to learn, up to the Europe's next multi-annual financing framework that covers more or less from 2007 to 2035. And this includes challenges going from counteracting biodiversity loss through the Nature Restoration Regulation approved in February of 2024, the implementation of the EU Water Resilience Strategy approved June last year, among others. Well, it's great to have you here, Stephen.
Thank you, Mónica. It's so interesting once again to have wonderful conversations with you. My qualifications in communication, to be more precise, it's actually classical rhetoric and dramaturgy, but I generally hide this so I can be taken seriously. But in this crowd, I think I can open up about my tendencies there. So
now I see why you're very effective in the communication side. I should take some of those lessons. And today we will talk about this natural capital financing facility and also the evolution up to the next multi-annual financing framework. Could you tell us, based on your experience running the NCFF, what was the initial theory of change of the NCFF and how is this learning informing the next multi-annual financing framework with the facilities associated to it? I would love for you to share with our listeners what economic sectors, for example, are we talking about?
So the NCFF, as we shall now call it, really the conceptualization of that instrument goes back over a decade. So it opened its doors for business back in 2015, but it had been a couple of years underway already. If we go back a decade or so, this is when the notion of natural capital became more common, I might say, in financing circles. I have to say, it probably meant different things to different people. From the point of view of investors, they saw something new, something that would be uncorrelated with the other business that they were doing and could be a great, say, addition to their portfolios. The way it was set up was really to target what today you might probably call conservation finance, in fact. It was quite ahead of its time in many ways. It's tried to combine biodiversity financing, but also with nature-based solutions for climate adaptation under the same roof. So it got a lot of things right. It wanted to provide a diversity of potential instruments, for example. But you might say the change theory from a banking and finance point of view was that, well, if EIB could do it, then it would be a signal to other private investors. And that, in fact, is often, you might say, the change theory used by public banks, which is that we would go first and then others would follow. And that, in fact, had some important, say, influence on the way it was designed. But I think we'll get back to some of the design of the instrument a bit later. But in fact, you could split the sectors really into two broad groups. You have sectors that are interacting directly with landscapes, forestry, like agriculture, or even marine space. And then you have a diversity of, say, enterprises who have, in one form or another, an impact on nature, which you then want to mitigate, but more importantly, nature-positive businesses somehow. And it was very much targeting these groups of sectors. It was actually very difficult in practice to delineate exactly what it should be, what would be eligible and what not. So we had eligibility rules that did their best, but it was also one of the features that we would go back and, in a way, reassess or get confirmation on eligibility after some discussion. So there was some flexibility there. It was also looking for some degree of innovation too. Carrying all this forward, I think the difference between when the NCFF was created, came on the street, say 11 years ago, and the situation now is that there's just a lot more awareness in wider circles of the risks that the non-functioning of ecosystems is presenting us. Climate change is more present, I think, in people's lives. And in general, as we look out into the market or players, a lot of people are more savvy also about finance in this space than they were then.
More environmental people are understanding
because,
finance. Okay.
Because our audience was largely an audience that was not used to the concept of finance. Most of them were used to the grants. And here we were trying to sell something new.
I would like to ask you a couple of things. So you say that the idea was, as often is with public banks or development banks, idea was to signal that if you could do it, other players, commercial players, could also do it. So other banks would take on that. At the same time, you talk about that it was quite challenging to play with the eligibility criteria, but there was some space, some flexibility. So two things. The fact that we now have more people who understand finance and conservation, adaptation, which could come from both sides, I think, maybe the technical people or environmental, but there are definitely more people in finance who are interested in these things. Do you have the impression that in that sense, it did work, the signal, into moving that to a little bit more mainstream? And the part of the eligibility, nature, like water, it's so permeating so many things. Is that a bad thing that it was difficult to be eligible? Or is the other way around? Do we need to build more flexibility in our instruments?
So on the did it work? I would say NCFF itself, I think, had an enormous educating role. The fact that we were the only repayable instrument for biodiversity and nature-based climate adaptation meant that we were a window really onto what was happening Europe-wide. So while my job was actually to be the focal point, in fact, the NCFF itself was very much a focal point. So anyone looking for repayable finance or something innovative in Europe basically crossed our desks. Even without design, we also became a bit of a networking hub. So we connected people out in the market and so on and so on. So, and I think that's one of the features that we see perpetuated in some ways, because it's still a developing space. But did it work or not? The premise was always that we would operate on a market basis, on a market-based approach to pricing, risk assessment, because that we believe will be the strongest signal then to others. And the thing is that what we would have to conclude really after many, many years was that the market was not really a strong force for scaling this yet.
So you were too early.
In some ways, but also there are some fundamentals in this area that make it difficult, you might say, to operate, say, in the conservation space, I would say, with repayable finance. So I think we see a lot more people who are a lot more educated now, and a lot more people now also beginning to articulate, I think, some of the fundamental limitations that we have. And the obvious one is that as a private investor, say, if you want to invest into something, then you want to capture those benefits. And so much of what we do in nature is hard to monetize. It's very hard to capture these benefits. The most positive thing is that very often there are benefits that potentially can be captured, but there's still a step up to where it covers your investment. So there's a gap that needs to be filled.
Yeah.
That is definitely the most important one. The other one is that we are still putting a lot of money and resources into negative pressures. So if you as a private investor want to go in and you want to create something, in a way, you have to contend with fixing the problems created by other sectors, you might say. So you're starting, in fact, way back from a state of degradation. And then another feature which really goes beyond purely the question of money and benefits, and it's a question of land.
Yes.
So to scale, you need to have a strategy regarding land.
Land acquisition and ownership.
Land acquisition, exactly. Or as a minimum, how you're going to, say, fund opportunity cost compensation, strategy for creating ecological coherence, and so on and so forth.
Yeah. So basically, I understand. I think you're mentioning that there is a whole issue of the scale at which you can start to see impacts. And that's not the typical scale at which maybe private companies operate, right? It's not within their fences. But the findings from this and the upcoming MFF, multi-annual financing facility, what are you taking with you and is shaping the way you are structuring the upcoming technical assistance or project preparation facilities?
So the main shift in attention is to focus less on financial engineering and structuring, I would say, and to look at the foundationals, which is the funding side, the revenue side, and in a way not to lose focus from that. The truth is, when we looked at the projects that we did, you will see lots of very interesting examples, but in some sense, they are anecdotal. To create something which is truly buoyant, there are some structural things that need to be addressed. And
so they are more the exception that what
exactly. Yeah. Precisely. Yeah. You find lots of heroes and exceptions, and I think there are important lessons to draw from them, by the way. But fundamentally, if you want to see this working at true scale, then there are these fundamentals. And bear in mind, just by way of comparison, in the water sector, annual expenditure in Europe is about 100 billion. I believe I read somewhere that we probably spend roughly the same on our mobile phones. But then you look at something like the nature restoration law, and then you have various estimates, one being 37 billion per year, not counting, for example, land acquisition or private returns and so on. But just to say, why is one apparently easy and the other one is not? And it really comes down to the fact that in the water sector, you have some very easily identified beneficiaries. You can, in a way, ring fence a service around them. Whereas when it comes to nature, you're dealing with many, many benefits and beneficiaries. So the future really of nature funding needs to be leveraged on the back of that. It makes it a bit more complex, but so it breaks down going forward in how do we then create these funding streams, not repayable finance, but how do we, in a way, reach the people who should ultimately pay for this? And regulation is going to be a very important part of this. So, in a way, regulation to force private sector to want to or to need to invest in these actions, either themselves or paying other people to do it. You say market mechanisms, and there's a language being built around footprints and impacts. The Nature Credits Roadmap, for example, is one of those things. Then at a level of abstraction, simply creating new public revenue streams, you could call them levies, if you will. People get scared of this because it sounds like a tax, and it's partly true. But other sectors are doing this, for example, in the energy sector. So in other sectors, you have both systems like, I could mention something like energy efficiency obligation schemes, where power players, power producers are obliged to collect, say, funding from their customers, which is then deployed into energy efficiency measures. Now, these measures are, in fact, de facto levies. And it's not far-fetched to imagine this being implemented in certain sectors in relation to nature. And for example, water. We have certain sectors that have a high impact, like data centers, for example. The other side of the story is that when you look at these ecosystems, there's always some benefits which are kind of off-site, things like carbon and policy-based nature. And then you have local benefits, which can be water, resilience. And in each case, when you add them up, you actually have a fuller picture and a more viable sum of funding streams. So the other side of the story of creating new revenues is actually how to deploy them efficiently and alongside others. So how to create stacking mechanisms that are not incredibly complicated.
So the contractual base for stacking those revenue flows.
Institutional basis for that. And for example, ecosystem services, payment for ecosystem services have a role to play, but today they are very complicated to set up, very bespoke, and therefore not very replicable or scalable. So, creating the basis to make those kind of schemes easier is a way of monetizing local benefits in a more efficient way.
How do you balance what should pay more within that total? That would be an interesting thought. Now, you had mentioned when we were preparing that there was also some lesson about the scope and maybe the eligibility of investment. So as you're thinking in future facilities, what is changing about the scope of the type of investment that you can do?
Yeah, so first of all, if you're going to create an instrument, you have to make it obviously bespoke enough to have the impact that you're looking for, but also not so narrow that it gets very difficult to deploy. So the biggest fear that people in biodiversity finance have in this space, you might say, is that the money will follow the path of least resistance. That once you start sharing it with other objectives are easier. So, for example, if you want to do something on climate and nature, and under the same parts, people would rather do a wind farm than a forest. And there's some truth to that. But I mean, there are ways of addressing this. For example, nature sits quite comfortably alongside things like adaptation and circular economy. So that needs to be managed somehow. The important thing is, I think, also to recognize that when we say we're restoring nature, if we only focus on CapEx, we don't get very far. So the CapEx intensity of at least nature investing is not that big. But if you
that's why for project finance it's not very attractive.
Well, you have to create something that's very substantial in a way to reach that kind of scale. And so the role of scale builders and institutions that can blend multiple revenue streams becomes absolutely essential. So the aggregators, project developers, maybe even regional and national bodies that can aggregate certain benefit streams and levies and pull it and then inject it into local initiatives that themselves are working on the local benefit streams. But as you can hear, what becomes absolutely essential now is the interoperability. So one of the questions that we're trying to shed some light on is that many of the current initiatives around biodiversity credits and carbon credits, out of fear of double financing, you might say, and greenwashing, they are often making it difficult for different funding streams to finance the same action.
Yes.
And it is absolutely essential that they be able to do so, or as a minimum,
to
at
make
landscape,
it work, right?
make it work, exactly. So you need to address that question.
Or your scope need to be much wider, to say, so that the same
Yes.
facility can support all those revenue
Yes.
stacks.
And also, one of the big lessons we drew from the NCFF is, again, because grass and trees are not capex intensive, is that some of the biggest wins you can make will be part of bigger programs. So mainstreaming. And I think what we also see, and something that we want to support going forward, landscape initiatives. Landscape initiatives are not things you build overnight. You have to invest in cooperation. But I think the evidence is strong enough to show that where the resources, effort, and time are made, you can create things that were not there before. And it comes down to understanding when we say we're investing in nature, yes, you can say we're trying to, at the end of this, create biodiversity, create biological growth or connectivity. But the investing level ultimately comes down to a social level and an economic level that lies on top of it. That is really where you can create things that were not there before.
Does it have to do somehow with the absorption capacity of that capital? And I know, I mean, this is something that I'm more and more convinced that no big changes happen in organizations unless there are courageous leaders who take their job much wider, but also take some risks. So I would love for you to tell us more about yourself. What do you work on now? How did you come to do this work? Quite a seldom combination of finance, environmental knowledge, and so forth. And what do you feel is your North Star or purpose?
So I think how I ended up in the NCFF, I think, as you said, it built on a number of factors. My favorite hobby as a child was staring down a microscope. So I've always loved nature and been fascinated and curious. So that curiosity, I think, has really lent me to get around in terms of things. So I started off, say, studying environmental science and civil engineering. Then I moved into the water sector, drawn very much by that interface between society and engineering. Over time, I think I got that taste for being able to make a difference, to build things. I think I got drawn to EIB then because I'm as probably European as they get, you could say. So I think this idea of joining this institution that could do something at that level was very attractive. And also, again, it combined so many of my interests in society and environment. At that time, I was still very much a water sector person. And really, being at a bank, I would say that the financing side became more and more present. I found that whenever I was outside the bank, people would identify me with a banker. So I thought I should probably get some qualifications in banking. And so I did. And that was, in a way, a bit life-changing. Then I actually started working more explicitly with finance. I then had the privilege of heading up an external office, which exposed me, I say, to a very wide range of financing, but also institutional questions. So when the job at the NCFF was free, I think possibly not by design, but certainly by curiosity, I did cover a lot of the areas that they needed. So I was really into environment and engineering and finance and representation and institutional. And they needed a kind of also person who could be a spokesman in a way and to be the institutional liaison. but also who could tell the story, because ultimately the NCFF was a pilot which would need to tell what it had found, for better or for worse. And I think that was ultimately my destiny, to bring that story and those lessons out to a wider audience. So that's kind of how I ended up in this. But I think my real, want to get to the North Star
Yes.
in all this is just that amazing rush when you finally find out that you can actually make a change and make a difference, and that there's purpose out there for you to find. So it's not like I had maybe the same purpose always, but the truth is that I have always had a very good sense for where my purpose should lie, where in the situations that I have been in, and I've pursued that.
I guess that's why it's the North Star, right? It's not like a pin on the map. It's like you want to do things that matter and use the full of your talent. So I can imagine that when this position that was asking, sometimes they say like a cat of 5 feet, right? It gave you the feeling that everything else in your life had kind of made sense. Beside your formal role at the IB, are there other ways you pursued that purpose, to make a difference, to leave behind a better world?
I think that's the benefit, I think, also of having clocked up some years and experience, that you suddenly realize that, say, that experience and that network can be very useful for other people. And so from within the role that I have now, it's very privileged. When you work for an international organization, you have a very high power of access. And so there are many people out there who don't have that privilege. And so at least within the possibility of the 24-hour day and having a family and a full-time job, I've tried to bring that into some other, say, civil society roles. Not mean to suggest that I'm only giving there. I mean, I must say I've learned at least as much, if not more, from those engagements, I would say. And I think there's just something something enormously important that I think we can all use, is that doing something is just so much more rewarding and sustainable when you do it together with other people. So when you reach 58, it's probably not that easy to make new friends. So one way is to get involved, get out there, meet people, and find a jolly good cause to rally around. So I work on, say, reef restoration. Maybe a synchronicity, but some people got around, were very dedicated, and made the impossible possible. We built a new reef, and now we're building a second phase. It's an amazing thing. And I think, again, it just gives you so much energy to see real things happening.
Yeah, and at the same time, like you say, it helps you see that concretely,
yes,
which is related to your work.
And then the other one is I work on something called Water, Air and Food Awards, which is effectively an award for social entrepreneurs, where we try to find, say, amazing people who don't get on the radar, I say, of normal development, finance or assistance, and just shine the light on them and effectively fund the local media. And then we step away. And what happens is their credibility in their own communities suddenly rises enormously, and they get local funding.
Oh, wow. So now we're getting more and more into the heart of the facility. Yeah. But before we jump into the financing aspects, Stephen, because I think sometimes we get so fascinated to say about the financial instruments and the financial engineering, but the hard work might be upstream of the investment cycle. So I love that we look at planning and deal origination. When you created the NCFF, and now also as you move more into adaptation, investments and so forth, could you tell us, like, how do you source these investments, especially an actor like the EIB, right? Could you tell us more about which parties make part of that process? Thanks to whom do you have deals? Which stakeholders play a crucial role to make it a success and sustainable over time? But also, are there different actors playing a role at different phases of the investment cycle?
So, indeed, I mean, it was a very important question, how we wanted to source investments, but also without, say, creating expectations that we could not meet. And I think that is always a challenge, I think, for anyone with resources, really, either grants or loans, is that at the end of the day, of the possible pool of interested people, perhaps only part of them or even a fraction are likely to be able to fulfill the criteria and be bankable and so on. So you have to be very careful, obviously, in how you message. But we had two primary ways, really. So EIB is a very large organization. We're present in all 27 member states. We have staff at all levels doing lots of functions in relation to member states. So we tried to work as much as possible with our wider network inside the bank. So there was certainly a bank-wide marketing exercise. And what was interesting is that most people were quite receptive. We could have scared them away with extra conditions. But as a whole, there was openness. People wanted also the visibility that went with working with something like NCFF. The second aspect was that we made ourselves famous in the right places. So
it's always handy.
So we were well known among at least investors, I would say. We did a number of events, word of mouth. The fact that we were around for a long time, I think, also meant that we were put on the map by virtue of the fact that we've been around, right? So we were known in the market also by word of mouth, you could say. But it was always managing, say, careful messaging. We didn't want to be too exclusive, too difficult, because then we would push away people who might actually genuinely have a chance. And then we need to be as frank and honest about what we were able to do, bearing in mind that the language we were speaking was a very different language to most of the people that we were trying to reach. So there was definitely a communication.
Is there a particular word that was like tricky?
Well,
it meant different things?
Yeah. So one of the interesting observations, and one that I think is still valid today, is that people confuse what is funding and revenues with financing.
Yeah.
So the general reflex in many cases, if there is a lack of money, is to think we will get a financier from the outside. What people often forget is that the very definition of a financier is that you end up giving them more than they gave you. So
yeah.
Basically, it's more cash going out. So people mix up, as I say, repayable finance with
grants.
With grants, really, and say the revenues themselves. So they view private finances as policy-seeking friendly uncles more than people who want their money back. So I think that was then, and I think it's fascinatingly, it's still a challenge for people to tell that difference. And the main casualty of not being able to tell the difference is that people find it difficult to learn from other examples because the terminology is all mixed up.
So in some courses and trainings, these boot camps, I said, look, you want to buy a house, you want a mortgage is the financing. Do you have an inheritance? Do you have a salary? Do you have any other thing? That's a funding, right? So unless you have all of that, you don't go to the bank.
The banks want to see, they want to see whether the funding, what will pay them back.
Yeah.
And it links also to, I think maybe the misunderstanding that we often encounter is that a lot of the conservation world and social impact worlds would like to access institutional capital. And so institutional capital really is the most scalable, but also the most sophisticated financier who is really expecting a very solid, very solid, well-known asset class. And really, I think most of the people in our space should be devoting their time in the first instance to investors who are more aligned. And we'll get to this point, I think, if we talk about the structure of the NCFF, because I think it's quite a good way of illustrating this.
Maybe just do very, very shortly. When we're talking about, you had the NCFF, became famous in the right places, the bank, the whole network was helping you finding the deals.
Yes.
Yet if you could tell who were those who did get financing? What happened before they came to you, or before they were eligible?
So at the end of the day, we actually signed quite a diversity of financing operations. So we managed to finance a corporate for forestry. We managed to finance a couple of funds, one active also in forestry, the other one in urban greenfield development.
Mm-hmm.
We ensured the financial, backing the financial infrastructure for Rewilding Europe Capital, which was the first, I wouldn't say microlender, but actually small loan lender to nature positive SMEs throughout Europe.
Okay.
Also did a number of public sector operations in green infrastructure. Another thing we also worked with national promotional banks. So these are banks that really are, how should I say, the national world banks in a way. So they have a variety of mandates. Some have very narrow mandates around SMEs. Others also look at utilities and so on and so on. For example, in that context, we work with the CDC, Biodiversity in France, who are a subsidiary of the CDC, the National Promotional Bank. So in a way, we've tried a lot of financing techniques, and I think it's fair to say that we were not a cheap source of financing per se. And we'll get back to that, why that is. So in a way, it took a lot for them to arrive at the point where they would approach us. And very often it's because the kind of financing they were looking for was just not available in the market. So as such, we fill the hole. So for example, if we were with the French corporates working on coastal nature forestry in Romania, it was difficult for them to get long tenor bank debt. They could get, equity financing through various partners that they had. But simple debt, what we could offer was a much longer tenor.
Yeah, and that was your competitive advantage. But now we're getting indeed into the financing aspect. So that's where we're going now, on the structures, the instrument, the capital stack. How did you have any elements of blended finance? So as we move into these more technical aspects of the facility, NCFF, but also sometimes I would like you to reflect on what's coming next, possibly. Could you briefly describe how it was structured, also to bridge that gap that we were talking about between the strategic, societal, and economic business case and a more financial and commercial one for the promoters?
So the instrument was set up as a collaboration between EIB and the European Commission. So on the Commission side, we actually had two DGs. We had DG Environment, but also DG Klima. And together, as it was, they went to the member states actually and got an allocation out of the EU Life budget for a financing instrument.
Okay.
So I'd say that money was originally destined for grants. Now, so there was a certain convincing job to be done to sequester some of that funding and put it into a repayable. So there was a hard selling job to be done. And actually, the country that originally pushed for this very hard was the UK, of course.
Your country.
And having pushed for the NCFF and all that, so they left. But as we can see, the UK has continued very much developing those ideas themselves. Exactly. So that money was, in a way, sequestered. And that was then used for an agreement between the Commission and EIB, which was used in the following manner. Some of it was set aside for a technical assistance facility because it was generally believed that this was a difficult area. I'm not going to call it sector or market, a very, very difficult area. So we would need technical assistance. And it's commonplace today that many finance instruments or funds actually have a technical assistance facility next to them. The other main body of that funding, approximately 50 million, was as a guarantee instrument.
Okay. 15 or 50?
50.
Okay, 50 as a guarantee. Yeah.
Yeah. So actually, this is gross of a management fee too. So when you set up these instruments, there's also a management fee involved, which tells you something, because we were asked under NCFF to look at deals that were much, much smaller, much, much more complex than EIB's regular lending. And therefore, it was natural to have a management fee. We can go into that. I mean, it was clear that an instrument like EIB that was supposed to leverage the full spectrum of EIB's financing technology in equity and debt, and our infrastructure here that, say, backstops the credit risk, that simply manages funds or administration. I mean, that actually has cost implications, and it actually makes it very difficult to create these structures without some coverage of the management costs. But the heart of all this, I said, was a portfolio guarantee. So coming back to what I've been saying a bit earlier, that by design, the NCFF was going to operate on commercial terms pretty much, or at least on EIB's normal credit risk policy and framework. What that means is that, at least pricing-wise, the NCFF was never going to be concessional.
Oh, okay.
So even though we got a guarantee from the Commission, the purpose of the NCFF was to demonstrate, if possible, the viability of a market-based approach. So therefore, we were not going to engage in, say, market-distorting pricing.
Okay.
Our funding costs through, say, the bank's normal bond issuances, how we fund ourselves as a bank, they are generally cheaper than that of commercial banks. So there was that price. It didn't come from the risk pricing. So what did the NCFF do for us then? Well, it gave us simply a mandate to go look at ratings, credit ratings that were below where we'd normally be looking. So below investment grade,
Okay.
we're looking at a higher, more risky operations. So that's really what that guarantee enabled. So when we were looking at deals in, say, slightly less mature markets, or where the revenue streams, you might say, were not known, or at least who were they going to come from, but per se not well recognized, that guarantee allowed us to on the right side. It was never going to create a miracle in terms of doing something which was fundamentally not bankable, or where the revenue streams were not present, but allowed us to stretch ourselves at least on that risk spectrum. That's really how that functioned.
So the portfolio guarantee, what did that do for you? So what did that mean? So that if, for example, if investee wouldn't be able to, I don't know, make work that nature-based solutions in the first year, you would still have a percentage of revenues of that project. Could you tell us a little bit more about the portfolio guarantee?
So the way this worked was that in the event of a default, meaning if one of the borrowers couldn't pay, then the guarantee would cover 95% of those losses, with the bank retaining 5% skin in the game on those losses. Now, you can always debate, how to say, that distribution,
the percentage, you mean?
the percentages, or whether that made sense or not. But
yeah.
that's how it functioned. And also that 5% exposure on losses actually also hardwired our approach to sticking to our normal risk guidelines. So in a way, as I said, on one hand, the financial architecture almost required us by our own rules to use our normal credit risk guidelines. But the intention of the instrument was, in any case, not to be incredibly concessional, because we wanted to demonstrate something that would then be replicated. So in a way, in theory, so if those losses started clocking up, then the limit was, in a way, the amount of money that the Commission had set aside. So there was a cap on how far that could go.
On that initially concessional money, but then now that you are using it for the facility. And now, in your experience, because you had corporate, you had public sector, you had SMEs, all of those really investing, taking the risk to go for these new types of solutions like nature-based solutions or conservation. What are the most binding risks for investors in this type of deal? And how does this risk shape whether capital is willing to come or not into this type of investment? And you said that you were not applying concessional terms, but still you had some elements I see of blended finance because you had a technical assistance and then a facility. Yeah, were there more other elements of that? I don't know, periods of grace or other ways that ensure that the risk that you were breaching some of those risk perceptions or real risk that are higher for these type of transactions for project sponsors?
Yeah, so my own personal revelations when I stepped into the world of finance was that finances really think in types or colors of risks very often, perhaps more even than the numbers. So finances will entertain certain types of risks, but not others. So what I'm saying is that the way it was set up, it didn't fundamentally change our perception of the kinds of risks that we would accept, but it enabled us maybe to provide financing where otherwise we wouldn't have provided it because we had a higher risk appetite. But also it enabled us to offer terms that the market wasn't offering. So longer tenors, and as you said, in principle, also in some grace periods. And where the real risk was well structured and well known, we could do something which was quite innovative, you could say. Bear in mind that most financing techniques were invented in the 1600s already. So in a way, we're not inventing new instruments per se, but we're finding new applications, often very old instruments. So that's kind of the business we're in, to be honest. The thing is, so when you look at the kind of, we're looking forward, was such a market-based approach appropriate, really? If you look at the world of institutional investors, they follow the same rules that we do. They have or commercial banks, they're effectively thinking along the same methods. And if the fundamentals in the market are not there, I must say, if, say, public goods are not being monetized, if those regulatory aspects are not in place, then market-based finance cannot, there's nothing there can fix.
It doesn't make the economical miracle.
Yeah, exactly. Yeah. So certainly looking forward from these things, we are recommending that, well, we need to, in a way, through similar mechanisms, the NCFF, but maybe going more deeper into risk territory, more into like impact investing style, where have a more independent, bespoke risk management policy and pricing, to support, say, the scale builders, aggregators and developers and so on. We're also recommending that because this is very much a story of the revenue side, that's the tricky part. And also because we're trying to bring diverse sources of potential revenues together, we should be addressing, say, revenue stabilization more through European instruments. Now, is that done elsewhere? Well, yes, the energy sector is pretty much built on it through offtake agreements, through contract for difference. So those techniques can be adapted.
Is the procurement side, the public procurement side of the equation somehow or not?
So in a wider sense, if you're trying to get private actors to come together in service of a public goal, then yes. So we're also thinking in the UK, for example, they're already using reverse auctions for landscape projects.
Well, those were used in Chile long ago in infrastructure.
Well, there you go. So these are not, we're not taking something which hasn't been done before, but we're trying to say, look, we can even use it here in the right settings, right? And if we give it the right framework, and it's possibly a more efficient way
to find the private sector. I completely agree, because sometimes in this world, it's quite difficult to find people are trying to find, for example, if I think about the Dutch Development Corporation trying to find a matching, private sector matching, and you don't find those people. But what if you turn it around and you say, I will give it to that who has me the less subsidy?
Yeah. Then also I would say regulation and bylaws and things like that have enormous power, I think, to drive private capital, especially things like urban projects, green infrastructure, but also water management. So where it's possible, there's a lot of value to be captured in a way through private developers if you can set the rules of the game. So traditional banks, and to some extent also EIB within Europe, have, say, waited for the bankable things to arrive. Here we are working very closely with the European Commission, really, to try to design instruments that will come in a lot earlier and be a lot more catalytic in that sense. There's also a strong advisory agenda that goes with this, to build these coalitions, but also to build the public authorities that can play their role in this space.
In catalyzing these investments, right?
Yes, yeah.
And that brings me to the third question regarding financing, because it does make a difference, for example, for corporates wanting to engage in what we call collective action at the watershed scale. And those are transaction costs. So where these transaction costs significant for you? I already heard that the answer is yes, and you had a management fee. And for you investee, how are you working to think about reducing those in the future? You did mention something about working with people who can scale this and pool, but are there other ways in which you're thinking to deal with those elephants in many rooms?
So the part of the answer is to take some of these costs away from where they effectively are difficult to deal with. So we're in an environment now where if you do a project in nature, then there's an enormous burden on you as a project developer in terms of inventing the wheel, in terms of monitoring, and also accessing the kind of data that you need to develop something. And also in terms of, how to say, addressing governance challenges that the public sector is not able to lift. So there's enormous investment required from the private sector right now. And strictly speaking, those costs do not have to be borne by the private sector in the long run. So, for example, I mentioned earlier that if you want to make the concept of ecosystem services and payment for such viable, then a lot of the monitoring and data needs to be a public good, really. That's certainly one aspect. And I would say, can't really expect private actors to spend 3-4 years preparing a public actor to act or to fund that process. That simply, we need to have better mechanisms really to build the public sector very often so that it is comfortable entering into agreements with the private sector, for example.
So what I understand is that you're looking at, in that public-private interplay, bring a better risk allocation and a better allocation of cost and ultimately of roles. So trying to work with the Commission for the multi-annual financing facility for there to be a clear view on what makes sense for this to make economical and financial sense for everyone. Is that a good way to put it?
And I would also say that when we're looking into the next multi-annual financing framework, there are many, many, say, demands on it. So I think we also need to be honest about the sectors that are just probably too hard to lift by the private sector. Call a spade, really. But then where there are opportunities, be very thoughtful about how we enter that. And where, as you said, where the risks belong, but also, if we need to fund, then fund what? So what we really are advocating for is a bit of a continuum. The NCFF had, I think, got the thing in theory, which was to have a range of options, even though it was constrained, you might say, by the market logic. Nevertheless, the idea of having a range of possible products is very valid. We're in effect saying, well, expand that range, also to look at on the revenue side, but also if you look at how, say, the venture capital space works, or if you look at how the infrastructure space works, you have a whole diversification, specialization of actors that come in at different phases and so on. Well, in our space, nature, we don't have a market as a driver that's strong enough yet to drive that, say, that ecosystem of different financing instruments. So we almost have to create it artificially.
Created. Yeah.
Create it.
And I do think that the infrastructure sector is a good inspiration source. Maybe not one-on-one, because these assets are very different. I would love us to go into the reflection of what you have been doing with the NCFF and what you plan to do with the multi-annual financing facility together with the Commission reflects some of the regenerative design principles, right? And there are 8, for example, according to the Capital Institute and the work of John Fullerton. And I think as we were preparing, I felt there were 2 that were very aligned with the work you're doing, but would love that we reflect on that. So one is views wealth holistically. And it says that true wealth is not merely money in the bank, right? It must be defined and managed systematically in terms of the well-being of the whole. This can only be achieved through the harmonization of multiple kinds of wealth or capital, to use economic language. Beyond the conventional financial capital, material and technological capital, we need to include social, relational capital, cultural, experiential, and even spiritual capital. However, one would like to define each of those, right? But all of this form of capital, we are experiencing the hard way now, rest on the foundation of natural capital, the nature where we live in, and in particular, healthy ecosystem functions, upon which, all of life, including our human economies, depend. So when we also think about views well holistically, we have to remind us, we did see very clearly around COVID that the whole is only as strong as the weakest link. So going into that, if we look at the NCFF, beyond financial performance, how was success defined for these investments? Who defined what success was too?
The short answer, of course, you might say, is something around eligibilities. So obviously there was some expectation that our projects would create some net nature positive, some increase in biodiversity in extent or quality and so on. But naturally, the financial layer is really building off exactly, there are going to be markets at the end of it of some sort, taking commodities or, say, avoiding costs. So that, I think, was maybe the great paradox to manage, that when we talk about investing in nature, let's not forget that when we use that word in a financial sense, we are talking about money, and that money is generated off the back of some human benefits that are derived, for better or for worse. So a lot of the things that we want to do for nature are ultimately, frankly, not going to be only defined through the financial returns at the end of the day, even though we're reliant on those for repayable instruments. But it's worthwhile looking at the operations that we did, and coming back to our point around heroes. Most of those people, most of those investments were not originally started by people who wanted to make money. Some were. But if you look at some of the most amazing projects out there, they were started by people who wanted to see something different in their community. And so the financing or repayable aspect was related to some kind of a financial sustainability question, but it wasn't the original driver necessarily. So if we step outside the NCFF, just to give a very big example, in Germany, you have the Imscher renaturing project. It's an old open sewer, effectively, that's been converted to a river. The main driver there was that people in that community didn't want to live like that anymore. They wanted to create a positive story, a better environment. They got together, and even within the public sector framework, if communities, utilities, and regulators get together, they can do amazing things. So let's not forget that we have a vote in this in our communities. I think going forward, what is quite clear is there is competition for space. Space, land is at the heart of all these things. Some cases, it's about withdrawing from, say, economic activities that probably shouldn't be. Possibly we've subsidized them. Maybe they don't belong there anyway. In other cases, it's about cohabitation, really, and co-location. This idea of multi-purpose landscapes, I think, holds a lot of power.
Wow, great. And as you were saying, the drivers behind the people preparing those investments that ultimately came to you were often much different than money. They wanted to live different and they united wills to make it happen. And at the same time, of course, you were also saying that NCFF, which was prototyping nature positive business models and was advocating for that holistic view of wealth, was taking place within the context and the institutional setting of the EIB, which is a bank. So within the existing context and institutional setting of the EIB, what were the limits of the current systems that you experienced and the trade-off that you had to make? And we will go much deeper in the trade-off in the next one, but still, it's the whole paradox, like how do we finance change to ultimately change finance?
So the NCFF, on purpose, you might say, piggyback on the way EIB normally works. And that worked both ways. It meant that, frankly, the projects that we did, I think, were truly amazing, if not heroic. But I think the result was also pretty much an indication that the amount of effort you have to do, you might say, to make something of that work in a market that's not meant for it, I think that's a bit of a challenge. And traditional banking is very much backward looking in terms
It's
of
based on historic data and so forth. Yeah.
So the equity space is different, but it has its own, say, formula, which can be very difficult to live up to in the nature space. So we were constrained, you might say, by the intention of the NCF to be market focused, market oriented. But I think also pointed, if one wanted to do something which could go an extra mile, you would have to revisit the whole approach to risk management.
That might be something we need to do it. But if there is anything, the peak of the iceberg about that approach, is there a specific assumption that could be worth revisiting?
Well, I think, oddly enough, in the venture space, for example, if you had an attrition rate of 90% or 95% or 98% for that matter, in terms of people interested in your financing versus the amount of deals that you sign, and then on top of that, maybe a high failure rate, no one would bat an eyelid. They would kind of expect a high failure rate. But oddly enough, when we're dealing with these things, the public sector, the public good, seem to have a very, very low tolerance of experimentation and failure. So we need that space to create the track record, you might say.
Maybe that's a point that Mariano Mazzucato talked about. Why not the state become a more venture capital source, more entrepreneurial? So going back to some of these deals, also from the environmental part. So could you share your take on how to balance nature and people's needs? How to decide what makes sense in some places versus another? And how to navigate the trade-off between human and nature activity and goals? Because we do want nature conservation, but still we have people who have very pressing needs. And we already see actually in the agenda in Europe today, sometimes this rupture between the environmental narrative and the people's narrative. So how did you, based on the deals you have seen, but also in the work you do in the two boards that you are, how could we balance those?
So have been some of the most interesting and also successful projects are where you have multiple uses in a landscape, really. So I think going forward, we will see much more, say, combination of nature, energy, and food, for example, in the same landscapes.
More mosaic type of.
Yes, mosaic type projects, you might say, partly by need. Many countries have landscapes that are degraded, but maybe potentially biodiverse, but they also have very pressing renewable energy needs. So you are entering somewhat into the unknown. But in the end, you need all of these things, water management and nature and food. So achieving those balances there are a lot of fears that you have to work with. I would say you could get the sense that there's some backlash against sustainability policies or nature and so on. But to be frank, one has to be careful how one decodes what hits the media and the
Yeah, there is quite
reality
some
beneath.
noise. Yeah,
A
yeah,
lot of
yeah.
noise, and beneath all that, it's a much more complex and interesting picture, really, because there are no countries in Europe now who are escaping the effects of
Climate change.
climate change at some level, and people aren't stupid. They will find ways of dealing with this, and therefore you need to look at landscapes in a different lens, really. The other thing about balance that is particularly hard in this area, when you enter the world of nature and investing or nature protection or whatever, you evolve a little bit in how you understand this at some philosophical level. And there's really, ultimately, working with nature is about inviting nature in to do its thing. It's about surrendering control, or at least some control, and having some faith that the natural processes can deliver, if you will. So navigating that need to control because you want certain outcomes or because there are financial things at stake, but with all the spontaneous, you might say, and undesigned amazing things that nature can do, that is a real balancing act. There's a certain paradox when we set up metrics for biodiversity in nature, because we kind of want nature to do its own thing, really. There is a school of thought that only nature makes nature, and it's not always practical, but it's a useful reference.
To be honest, I think what you're touching upon is almost like most fundamental part is that how do we let go of control, which is so embedded in performance and success metrics.
Yes. And maybe what obscures that so much of what we're trying to do in nature-based solutions or nature restoration is actually, in the first instance, rolling back foolishness. So if you
that
look
we
at
have done through the last
that we've
decades,
done,
you mean?
yeah, just which in hindsight are highly questionable. Why would you drain half of the landscape so it runs really fast down to the other half? When you think about it, it's not particularly clever, is it? So there are many things inside, I think, the space of nature-based solutions that are, in fact, you don't even need to call it that. It's really relatively simple principles about retaining water, and it extends into even cities. So the nature-based solution agenda in cities is also a lot about delaying water or providing water for greenery. So you get evapotranspiration, so you get a heat pump going. I mean, it's all connected.
A lot of it, Stephen, is understanding the water cycle and the
Yes,
scale at which it works, right?
definitely,
And I always said, because the last 3 weeks I have been consciously or unconsciously in some kind of missionary thing, talking to people about how water risks work. And we all learn it in school, but then we forget. And we become engineers and we make roads crossing through where water should flow. And then we're like, why are they getting flooded? Now, if you had unlimited power, we would all what you have learned the last decades, working not only in Europe, but Africa and many other places. If you had unlimited power for the day, what is the one structural thing you would change about how we originate, fund, and finance investments?
Well, the simple one would be that destroying something as precious as ancient ecosystems should just be totally off limits. To recognize that our landscapes are living, breathing things, and that it is quite possible to do irreversible harm. That when we get into a corporate setting, that we should still be responsible animals. No one's going to come and save us. I could then, if I had one financial wish.
Yes, go on. I give you another.
Yeah, it would be to really focus on creating the funding streams so that a variety of actors can do what's best in their environments and in their societies.
And one more, stretching it a little bit out of Europe, because the EIB does also work outside and you have done work outside Europe. Are there also things that you would?
I think the most difficult thing in the international system is to do the obvious things or simple things. We're awfully good at the complex things, but so many projects, for example, that for very little could do so much, need to question a bit the efficiency of the help that we're giving, because so many good projects are not getting the funding. And I think the way we often push this funding through a system which maybe isn't really geared to deliver this kind of help, actually.
Thank you so much, Stephen. It was, as always, I learned a lot. Thank you for listening to Investing in Regeneration. But before you go, if this conversation sparked new ideas for how we understand, plan, or finance projects, I invite you to take one small step today. Leave a rating and a review. It helps this podcast reach the people who are shaping decisions. And please share this episode with a policymaker, a planner, an investor, or anyone who has the agency to influence how projects are originated, designed, and financed. This is not just about spreading a podcast. It's about joining a quiet revolution, reimagining finance, and embracing a new investment paradigm that reconnects people, nature, and the economy, and places finance at the service of life.